the title company holds that earnest money during the whole approval process of the loan and during that contract period, which is generally about 30 days. So title company's got the earnest money. During the first 10 days of the transaction, that's what's called your inspection period. That's your due diligence period. You could cancel the contract for any reason during those first 10 days and get a full refund of your earnest money. And during those first 10 days, you want to get the home inspected, because you've got these first 10 days where you can cancel for any reason and get your earnest money back. If there's any physical deficiencies with the home, anything that's wrong with it that's a major issue, you want to identify that in the first 10 days so you can cancel and get your earnest money back. So your real estate agent is going to set you up with an inspector to do an inspection of the home. I generally tell people to plan on $400 to $600 for the cost of a home inspection. You'll pay that directly to the home inspector, and then they'll give you an inspection report, which is a detailed write-up of what kind of condition the home is in. And they'll point out anything that's majorly wrong with the property. They'll let you know about little things that are wrong with the property and maintenance items that need to be done. So it's a very comprehensive review on what kind of condition the home is in. And if there's a major deal breaker, then you can cancel at that point and get your earnest money back. If, assuming everything's good on the home, now you're continuing to move forward in the transaction. So while you're going through this inspection period in that first 10 days, we're also starting the approval process for the loan. So if you haven't locked an interest rate yet, we'd be sending you updated terms and giving you an option to lock your rate. We would have disclosures for you to sign with an electronic signature. We would ask you to set up a homeowner's insurance policy to cover the new property. So you have to have insurance on the home to protect and rebuild the property if it were to burn down, like from fire damage or major water damage. And so we're going to have you set that up. And then we're going to order an appraisal for the loan. So we're going to send an appraiser out to the property to give us an estimate of the home's value. We collect the appraisal fee up front at the time that we place that order. And the appraiser is going to go out to the home. They're also going to do like a high-level inspection of the property, just make sure there's no major issues with it. And then they're going to come up with an estimated value. Now, I always tell people, like, don't put too much stock in whatever number the appraiser comes up with in terms of a value. You could send two appraisers to the same house on the same day and get two different numbers in terms of what they think the home is worth. It is a subjective analysis, and it is not a concrete number. So if your home appraises above the purchase price, you don't want to read too much into it. If your home appraises for less than the purchase price, you also don't want to read too much into it, because there is a subjective element to that report.